Raj here with Daily Profit Cycle. It's Wednesday, July 14th, coming at you with another weekly video market update. The CPI came out this week at 5.39%. It was at twice the consensus, and that's the fastest year-over-year growth since 1991 and the largest sequential growth, month to month since before I was born, since 1982. And so, the narrative or the debate continues about whether this inflation is transitory. And of course it's not, because the consumer price index just came out at twice the analysts or the economists' expectations, right? And still you have the economists and the analysts out there today saying that the inflation is still transitory despite this CPI number. And I'll get to some specific call outs in a second. But first, I want to tell you that I'm just back from vacation, and I went to the Oregon coast and did some fishing in a dory boat, which is a local thing on the Oregon coast. You launch your boat right from the surf. You back up right into the crashing surfs and launch the boat, turn it around, pull the truck and trailer out of the sand up onto higher beach, and get back in the boat and drive out across the breaking waves to go fish. It's quite rough. And the seas were rough as the Pacific coast, the North Pacific. And so the captain was sort of, tongue in cheek telling us that it was supposed to be getting more windy and it was supposed to get rough. Of course, the joke was that it was already windy and rough, right? They weren't calling for it. It was already there, right? Every time a big wave would come and crest over the bow of the boat, or every time we would, hit an 8 or 10 foot swell, he would say, "Man, the forecast says it's really supposed to get windy today." And we would laugh because, of course, we could all see that it was already windy. And when I see these economists say that this inflation is transitory, I have to laugh because I can just look and see that it's not. And so this morning, I'm going to pick on Mr. Alan Cole. Alan Cole is an economist at a think tank, apparently, and not sure how much thinking he does. But this morning he's tweeting, he's on team transitory, but the inflation for shelter is coming even as other components recede. And he goes on to say that the inflation that he sees about rents is anecdotal. And the reason I saw this is because another economist named Austin Goolsbee, who gives policy advice and is an econ professor at a famed university, University of Chicago, and was also in like the Council of Economists or something like that. So he's important and he wears a bow tie, and he was retweeting Alan Cole because, of course, this inflation is transitory, and that's the narrative they have to stick to because, if inflation is running wild, then the policy advice they gave isn't good, and maybe they won't get that next consulting job, or their pass for the revolving door between government and university and private institutions will be revoked. So Alan says that, he can't find this rent inflation. It's the only thing he can see about rent prices rising is anecdotal. Well, here's a chart, Alan. Here's a chart from Hedgeye, in fact, from about the national multifamily median rents, the actual transacted prices, the actual waves crashing over the bow of the boat, Alan. And that says that transacted prices are rising precipitously. Look at that year-over-year change, 8% as of the last number there. That's not anecdotal, Alan. That's real transacted prices of rents inflating. And he says that, even in his tweet, of course, there's a but the housing is going up. The other components are receding. What other components are receding, Alan? Oil remains near 2-year highs. I have another chart here because we don't need anecdotes. We can see the waves crashing over our boat. Here's a chart of the CRB commodity index, still at annual highs. I'm not sure where this inflation is receding, Alan. And so it's certainly not receding in my account, which continues to go up because it owns the things that are and have been non-transitorily inflating, Alan. And so that's how I feel about that. It's cute that you're on a team. I'm on team transitory. I'm on team make money for myself. And I do that by calling out bullshit and not reading into narratives from econs and journalists. So here's the next tweet I saw this morning that caught my eye. It's from Miss Sylvia Killingsworth. She's of course, a market expert because she used to edit the New Yorker and recently edited a book about food. And so she's tweeting that Jay Powell is not going to do anything with rates because he doesn't see the whites of their eyes. And so it's war, of course. Jay Powell, of course, is a fearless leader, like Game of Thrones, right? Waiting to stab somebody with a spear. Can you imagine that frail man in battle? And so Sylvia, what eyes? The whites of whose eyes, Sylvia? Whose eyes does Jay Powell need to see to say that inflation is real and act on it? Like the whites of the homeless guy's eyes on the corner, of which there's increasingly more of as housing prices inflate out of control and supply of home stock doesn't rise fast enough to keep prices down. So people get priced out of the market and end up in shelters and on the corner. The whites of those people's eyes. Whose eyes are we looking at to see inflation? All we have to do is look around us at reality. And so, that's mainly the points I wanted to make today is that, you can see these people with, PhDs and econs and the editor of the Digital Business Week at Bloomberg or whoever Sylvia is, telling you and tweeting about these things that all you have to do is look at reality. Like Alan's on Team Transitory. I'm on Team Reality. Inflation is here and it's real, and we've been profiting from it. If you've been following my premium research for well over half this year, going back into 2020. And so then you got to start arguing about, what's the definition of transitory? We've been at this for a long, long time, harnessing this inflation in our accounts. And so these people that have big platforms, but that don't actually manage money, they just write about things that they think or that come from higher up or that, support the narrative that they need or want. But in reality, the CPI and inflation is spiraling out of control. And of course, it's caused by the Fed themselves, the same people whose we look to as quasi gods to see if they see the whites of their eyes for inflation. I'm not sure what you're talking about there. So I'm going to get back to it. I was talking last week about rates starting to fall as one big indicator. Of course, stocks continued to hit all-time highs after that, but I believe a rotation in the market cycle continues to be on. I was talking about, in fact, real estate for the past couple of weeks, and that continues to do well. Even Alan concedes that, home prices are rising. And of course, we know that rent prices are rising, not anecdotally. So a bit of rotation into real estate, gold looking a bit better here as those rates pull back. Rates might not have flipped the stock market, but they certainly have. The pulling back of yields have let gold go back up and not look as bearish as it has been. And so that's sort of what I'm watching in the market this week. Continue to own energy, continue to own real estate, and then really bullish on other commodities like natural gas has been doing really well. But another one called star gas or helium, which you're really going to start hearing about more in earnest from me this week, I'm excited about as well. So, keep your eye on the waves and not on the narratives of economists who have career trajectories to keep intact. And that's it for me. Nick Hodge signing off for Daily Profit Cycle.